Today I'm sharing 5 stocks that you can buy and hold forever. If you're new to investing or if you are an experienced investor, these are really great stocks to have in your portfolio to keep forever. Welcome if you are new. My name is Kelly Ann Smith with freedomandabudget.com. My channel is all about living life well on a budget and investing, building wealth, and just being intentional with your money. I do have a brand new course on how to save money on groceries where you learn how to different things that you can do to save a ton of money on your groceries, different things, easy tips that add up big over time. My average student saves $100 a month on groceries. That's $1,200 a year. That is crazy. So I'll have a link down below in the description. And if you use code YouTube, you get $15 off your purchase. Now for investing. So there's a couple different apps that I use for my investments. I use Robinhood, I use Webull, I use M1 Finance. I love all 3 apps for different reasons. I have a lot of different videos on the apps and what I like about them, the pros, the cons, all of that. So check them out down below in the description box. I have a playlist on investing for beginners and a lot of great information as well. If you want to get any of these apps, they'll be down below in the description. You get 2 free stocks when you sign up for Webull. One of them can be valued up to $1,400. Also a free stock with Robinhood and M1 Finance. All great apps down below in the description. Okay, so a couple different things that we're going to talk about with these stocks and different things that we're going to evaluate on these stocks. I love all 5 of these for different reasons. So I'm going to go over the pros, the cons, all of the different stocks that we're looking at. So we're going to look at a couple different things with each of these stocks. And the first one is the company's history. So things that I look at in the company's history, how is the company set up? Are they set up to sustain in the future and continue to make money in the future? What is the future of their brand? How are they going to do in the bull market as well as in a bear market? We're also going to look at the PE ratio for each stock, and that is the ratio of the company's share price to the company's earnings per share. This ratio is used for valuing companies to find out whether they are overvalued or undervalued. And then as well, the dividend yield. And that is the ratio of a share divided by the price per share. It is also the company's annual dividend payments divided by its market capitalization, assuming the number of shares is consistent. The first stock we're going to look at is Johnson & Johnson. And Johnson is so much more than just personal care items. They have been having a consistent dividend yield for 57 years. 57 years. It is impossible for me personally to go throughout my day and not use a Johnson & Johnson product. They are all over my house. They are just in everything that I'm using on a day-to-day basis is made by Johnson & Johnson. It's a great company that proves that it holds throughout the time, and it is a strong company that is just incredible. So Johnson & Johnson, we're going to look in Robinhood, and they are trading right now at $145.76 at the time of this recording. Now this could go up and down. As you can see, over the past day, it's gone up and down. And their PE ratio right now is 25.62 and their dividend yield is 2.65%. So they have still a great dividend yield and a strong PE ratio. Next up is Waste Management. So Waste Management is a trash company, which no matter what happens in the economy, we are still going to be producing trash, and we're still going to need our trash to be picked up. You cannot go anywhere without seeing one of those big green trucks come across your neighborhood and have your trash picked up. They are a strong leader in that industry, and they are who we use. They are who I use back home in Massachusetts. They're just everywhere. They're an awesome, strong company. So right now, Waste Management is trading at $109.60. Their PE ratio is 29.03 and their dividend yield is 1.93%. Next is Pepsi, and Brad Finn actually is the one that put me onto Pepsi and made me do a ton of research on Pepsi, and I was blown away at Pepsi. You guys saw me buy it live in one of my investing videos, and Pepsi is amazing. And not only are they a soda company, but they have so many other products outside of soda, which if you're gonna be drinking soda, you're gonna want a snack to go with it, right? So that may be Lay's potato chips, which is owned by Pepsi. Those amazing pita chips, which I love pita chips. They're so good. I'm on a low carb thing right now, but pita chips, oh, they're so good. They make hummus. They make those Starbucks ready drink things. They are amazing. So many different products, just a wide variety of products. So even if people stop drinking soda, which let's be honest, they're not going to, but if they did, they have so many other products to withstand them as well. Pepsi is going to be around for a long time. So right now, let's see what Pepsi is trading at. PepsiCo is trading at $137.66. And just to remind you guys, if you have Robinhood, if you have M1 Finance, you can do partial shares, fractional shares as well. So you don't have to buy the whole stock at $137. You can put in $5, $10, whatever you want into that company, and you're still going to own part of a share. And that's a great way to get into these companies, because I know that if you're starting out investing, you may not have a lot of money to be buying all of these different stocks. You want to just have a little bit and get your portfolio started. So their PE ratio is 28.12 and their dividend yield is 2.82%, which is great. I really try to keep the dividend yield under 6%, right around that 2 to 6%, just because if it gets too high, then that puts up a red flag in my eye, like, oh boy, we better watch out. So that is a great dividend yield for me. I am totally okay with that percentage. Next up is Caterpillar. Now, Caterpillar has been a volatile stock in the past, but it is a stock that has a consistent dividend yield for the last 26 years. That is amazing. And Caterpillar, you know, like Waste Management, construction is always going to be going on. There's always going to be new developments and new reasons to use Caterpillar, construction, big truck type vehicles. And I know that where I live, it used to be all farmland, and now it is all houses and all neighborhoods. And so houses are always being built up. There's always new construction. People are constantly tearing down and rebuilding houses and complexes and all different things like that. So Caterpillar is needed in so many different ways in so many different places. So let's look at Caterpillar's numbers. They are currently trading at $132.60. Their PE ratio is 14.06 and their dividend yield is 3.10%. So right around that 3% dividend, that's a great solid dividend for Caterpillar. And like I said, they've been having a consistent dividend yield for 26 years. That's incredible. Next is 3M. Now 3M is typically known for Post-it notes, and we love Post-it. I am a Post-it note queen, but they don't make just Post-it notes. Just like Pepsi, they have so many other products as well. They have lint brushes, they have sponges, they have all sorts of random household items, just like Johnson & Johnson, and different things that you use on a daily basis is made by 3M, which is so cool. So let's look at their numbers. 3M is currently trading at $150.47. Their PE ratio is 17.06 and their dividend yield is 3.87. That is awesome, that is strong, and I am totally happy with that dividend yield and that PE ratio. So this is 5 stocks that I personally am buying and holding forever. I think they're awesome stocks. They're great beginner stocks if that's something new that you're getting into. And if you want to know the difference between M1 Finance versus Robinhood, the pros and cons in each, check out this video here. And if you want to know why you cannot rely just on your day job, why you need multiple streams of income, including dividend yields, check out this video here.
No.